Well, I don't know about you guys, but I'm getting sick and tired of everything I click on. It's saying inflation, inflation, inflation. But that's the key word in 2023. So we got to live with it. But what you're watching, what you're seeing on your screen right now is I pulled up CNBC just to prove a point to you. The stock market is affected by inflation. The house prices are affected by inflation. Interest rates, inflation. Why? Because the Federal Reserve is destined to get inflation down to a 2.0 figure. And we're about 3.0 right now, and they're expecting that number to go up a little bit, and I'm going to go over that with you here in a second. But you can see right on the screen, the S&P falls slightly on Wednesday as traders await inflation data. So what's that data that's coming in that we really need to kind of concern ourselves about? So let's get over to the economic calendar, and here it is. Right now, today, we don't have anything coming in today except for the oil inventories. I'm going to actually watch that precisely today. Why? Is because oil right now is the pivot point in the numbers that I'm trying to forecast. And I'll get to that in a second. But you go down through here and you can see CPI, core CPI, CPI, initial jobless claims, and then on Friday you see PPI. So why is all this so important? Well, the Federal Reserve was actually created they have two what they call mandates, specifically why they were created. And those are, number one is price stability, aka inflation. Their job is to keep inflation in check. Their guide is about a 2.0 figure there. But they also, their goal is to maximize employment through the US. Well, in this cycle right now, what they're saying, as they come out and even said it to us, is we need the unemployment to go up, meaning less and less people working, more people losing their jobs. Why? Well, they're trying to deflate the economy, having people not spend so much money. And it's kind of working, but it might be like blowing up in our faces. Let's go over why. If you go over to here, people are still spending like crazy. Credit card balances jumped in the second quarter, and they're now above $1 trillion for the first time. So people still have money on the sidelines. A lot of people are charging some things right now, but they still have some money, and I'm going to prove that here in a second. But it's starting to run out, and it's starting to come down quite a bit. So what we want to do on that is let's go over to the U.S. debt clock. So if you want to check out this, it's called usdebtclock.org. And if you see right through here, this caption right through here, what is the M2 money supply? Well, the M2 money supply is basically how much you and I have in short-term, basically investments, or not even investments, maybe checking, savings, mutual or money market accounts, and so forth. You see that number plummeting by the hundreds of dollars per second, okay? But if you see down through here, here's where we were in 2000. Here's where we are today. It's 5 times the amount of money in circulation right now than it was just 20 years ago. But that number is coming down and coming down quite a bit. What caused it? Well, a lot of things caused it, but one of the big things that caused it was when the government kind of kept stimulating the economy, as well as the Federal Reserve dropping rates to basically zero for years. So that spurred a lot of activity, that put a lot of money in people's hands. They weren't getting anything on their savings accounts or anything else, so they're spending it because we're an economy of spenders. So that's what's going on right now. But the pivot point that I'm trying to watch right now is what the CPI number is going to come in. And the catalyst right now, for the reason I don't really know what's going on, is right here. You guys know how I feel about oil and oil prices. We're getting hosed at the pump, and I proved that on videos I did previously. I showed where profit margins at the gas stations, profit margins are usually about 4%. In 2023, about in March of 2023, they spiked to the highest level. It was about 120% returns or profits at those gas stations, up from 4%. So, a lot of these companies, a lot of the oil companies are making a lot of money. But right now, what I want to focus in on is what is the price of of a barrel of oil, okay? And it is completely volatile. That's when, if you look over to the economic calendar that's coming out, you're going to see right through here the CPI numbers. You have core CPI. What the core CPI is it strips out food and energy. Why? Well, because energy is so volatile. You can see it right here. So what happened was, let's just go back in time a little bit. And if you just go back to, the first quarter of this year, oil prices were at $67 a barrel. Okay, but they've been volatile and they've been moving all over the chart. So let me give you the chart right here, and you can see right through here. Here's the price stability or fluctuation of oil. If you just go back to where we were on June 27th, not too long ago, oil went from here all the way up to here. How much of a percentage change is that? Well, let's do the math for you. If you go to ChatGPT, you can do the numbers right here. If oil goes from 84, was it $67 a barrel? Now it's at 84. It's a $17 difference. How much is that in percentage wise? Well, if you go down through here and you can have it calculated for you, it's a 25% increase. That is the wild card right now in the CPI numbers. Well, it's going to get stripped out of the core CPI, but it's still going to play a role in stuff. Because why? Well, think of what oil's used for. Oil's used to produce all the items. It's used to get items from one place to another. Then you and I have to use oil in our cars to go get that product. Everything revolves around oil. So if you have a 25% increase in this element, probably going to see inflation go up. And if we see inflation going up, you're going to see the Federal Reserve coming back saying, guys, inflation's still rallying and still moving up, so we have to do something. So that's why some people are saying, well, this number could actually make the Federal Reserve kind of be forced their hands to increase rates once again. So I'm going to analyze this and keep updating you guys on a daily basis where things come in and what my projections are. But right now, let's see how the bond market is being affected right now by all this information. You can see right through here, there's not much of a change. Right through here is what we monitor. So what we do is we go to the MBS Live. If you're a mortgage advisor out there, I highly suggest you get it. There's a link down below. But what you're seeing here is the price of a mortgage-backed security bond. We don't focus on the 10-year treasury like a lot of people focus in on, because why would you when you can get them watch the mortgage-backed security bonds and what they're doing? The number right here is what the price of the bond is doing, and right here is the change that's taken effect so far today. So far today we see the MBS market up, the price of the bond up 3 ticks. 3 cents, let's say. It's not enough to really do anything, but I love the stability, but it's going to be stable probably most of the day because everybody is awaiting what? Well, same thing as with the stock market's awaiting. They're waiting for the inflation numbers to come in to see what they should be doing. So tomorrow's inflation numbers on the CPI right through here that we have, you're going to see right here on your screen. Those are going to be updated or come out tomorrow morning before the markets open. This could be a huge market mover up or down. So I'm suggesting to all our borrowers, please lock in today. Make sure you're locking in. Make sure you're locking in with a broker as well, because what might happen is if mortgage rates plummet, if you're locked in at a bank, you're stuck. You can't go back to them and negotiate. It's like buying a stock. So let's say you buy the stock today and the market plummets in the next 2 days. You can't go back on Friday or next Monday saying, you know what, I bought that Google stock and the price is down $100 a share. I just want to turn in my stock for the price I paid for it, and I want to buy it back now at the current price. Can't do that. With a broker, what we can do is we can actually move your loan through different lenders to make sure you're utilizing the best rates in the whole country. So that's my report for today. Let's go over to see where rates are right now. And we go to this, and this is Mortgage News Daily. They post rates on a daily basis. These are the top 6 products people use when they're purchasing or refinancing their first house. So the scenario behind this, where these rates come from, Mortgage News Daily, they survey lenders all over the country asking them these questions. Basically, what would you do with a borrower that's buying their first house? It's their primary home, and they're a first-time home buyer. So, okay, it's a single-family home, their primary home, first-time home buyer. They're putting 20% down, 20%, and they have a 740 credit score or higher. That's basically where the rates would be. So if your rate isn't there on the board, it's because maybe you have a lower credit score. Maybe you're not putting as much money down. Maybe you're buying a 2-unit or 3-unit building. These are reasons why your rates might be a little bit different. But remember, guys, these are national averages. These aren't specific rates. This just gives you a kind of a direction on where mortgage rates are going. So if you'd like to find out more about me and my team, what do? Well, go to therateupdate.com, and here we are. Best way to get us is to give us a call. 844-775-5626. What we do is we love doing consultation calls with you, because a lot of places want you to just apply for a loan and then go on a tangent and just go work your way through this. But what do you do if you just don't know? You don't know, okay, Dan, my credit score is X. Does that qualify me? I only have X amount of a down payment. Can I get qualified? What can I do? So we switched up our application system down below. So if you'd like to schedule a consultation call with us, if you can't get us during the day over here, please call us. But if you can't, please schedule an appointment down below where you can schedule a day and time at your convenience, and then we'll make sure that we reach out to you at that time to answer any and all the questions that you have. So thank you so much for watching, guys. God bless, and hope to talk to you soon. Bye-bye.